Hello folks, welcome to Pro Trader Strategies. I'm Eric Wilkinson and this is Spotting the Trade. So what I like to do in these videos, talk about the economic data, see how that's impacting the overall markets, and then I'll round it off with talking about some of my trades. Also, if you throw anything over there in the comments section, I'll be happy to throw that up here on the screen and we'll go through that as well. Maybe we'll find a trade and I'll throw it on during this video. Make sure you smash that like button too, please, for me, because what that does is it feeds a robot that runs out and finds somebody that looks just like you. So if you have any takeaways here, please smash that like button before you take off. All right, so let's talk about the economic data. Across the pond, not really a whole lot going on other than we did get industrial production coming out of Great Britain. That came in a lot better than expected. Probably the only silver lining of any of the economic data we really got today, coming in at 1.2%, expected to be 0.3%. But construction output, negative 1.6%, expected to be a positive 0.6%. So a big pullback there. And then if we look back here to the United States, we got our PPI, Producer Price Index, month over month, coming in at 0.7%, just slightly higher than expected. Core PPI, Producer Price Index. Remember, this is going to be something we want to look at for inflationary pressures because they will, if they see their pressures ratchet up, they're going to then try and pass that off to the consumer. So that came in core, which is going to strip out food and energy, comes in at 0.6%, expected to be 0.5% there. What else did we get? We had something else I wanted to talk about here on the wholesale inventories here in the United States in line with expectations. All right, so something to talk about from yesterday. We were talking about crude oil. Remember, we had a 4.5 million barrel build over what was expected. Well, we are seeing crude oil. Forget about that today. What a difference a day makes. Something to keep an eye on here, folks, is to watch the 50-day simple moving average here. Sorry, I'm trying to pull up my pen real quick. And I might want to, where's my thing at? There it is. You got to juke that thing around to get this to pop up. All right, so something to keep an eye on is this is the 50-day simple moving average, the day SMA, all right? So that right there is going to be something that we've talked about before. It gets below there, we see short-term weakness here. We've been bouncing our head up against that for a couple of days now and have failed. I think that we probably see a failure there because I'm expecting the market to come down and retest at least 61 here, folks, or 62. There's just too much build there. We're seeing the economic data show that the economies are slowing. Now, one of the things we're also seeing is polypropylene is sorry, it's trying to, it doesn't like me just trying to slide that over. All right, come on, baby. All right, go back to the marker. We'll just leave that there. Anyway, keeping your eye on that. I think that there's a lot of oil out there, folks. Now that the Gulf is opened back up, we are cranking out oil. So 11 million barrels a day. We're seeing builds already in the summertime. I think that that's going to show some weakness here for crude oil. Bonds are coming off again today, finally starting to break. They tested that 50-day simple moving average again yesterday, and it failed. So this is kind of what I'm talking about with crude oil, is we're seeing this failure around that 50-day simple moving average. I do expect us to stay above 162 handle here in the bonds. We still are seeing asset purchases from the Fed. That's going to support this. And folks, we're seeing economic data slow down. The Fed is not going to raise interest rate unless they get to the employment mandate. All right. And that is a far, far away goal at this point because we're seeing the economy start to slow a little bit. Anyway, sorry. I feel like I'm new at this or something. You don't want to work now? Cancel, replace, something. Let me have my thing back. All right, gold, nothing really to see here. I do expect gold to start marching back up into the 1800s And that's just a product of inflation. As we see inflation go higher, we're going to see some weakening dollar here, and gold is going to be a flight to safety. Now, Bitcoin, folks, I've been waiting to get to this. These are some major levels we need to talk about here, folks. And I've been saying, I've been touting up Ether. I think Ether is probably going to end up being one that creeps up, and they probably at some point will match each other, or very close, I think, in price. But I think the upside potential is in Ether. Today, I think it was down around 3,200. I think Ether is going to jack up, especially because it is the thing we're going to be using for transacting on these JPEGs or the NFTs. So Bitcoin, yes, it is becoming a bellwether in the sense that it's being accepted by Venmo and some other major companies. But the thing I want to talk about here today is not necessarily whether or not one is going to survive or not. But what I want to say is that we are looking at this level right here. So 43,788. I'm seeing this number. Some people are saying 75, whatever. It's, for me, I'm looking at the 778. You can see basically all of these. If you guys go and check your charts, the only one that really broke it was that one there, broke just below. I think it was in the 43,600 handle. So we repelled up and away from that. But this is something what chartists are going to look at, that 61.8 Fibonacci. Now, if it breaks below that, that is a pretty major support area. We're going to possibly visit this 50-day simple moving average. That should show a little support on this pullback if we break below that. I'm going to say right now it's lining up with 41,000. I would say 42,000 would probably be where those two meet at that time. So I'm going to say 42,000 is going to be a support area as that 50-day simple moving average marches a little bit higher. It's going to kind of do something like that. That's what I'm expecting. If we break below this 43,788, that would be the first support. It's going to be a minor one, but the one that it's going to be targeting is, let's just call it 37,000 is the next support, major support anyway, in Bitcoin. And a lot of people will talk about that mark right there, 30,000. Why? Because we've got a point of control. This is the POC. All right. That's for the time volume. So what we used to say on the floor, when you're trading and you see price, and this is going to become very hyper aware for the new traders, because you guys are hyper focused on these cryptos. So you see these prices, and those prices are getting logged in your heads. Wolfman, you weren't clear on where you get out of the XLU short straddle yesterday presentation. Can you clarify? Yes, I will. Give me a second. If you guys don't know, I do videos on Thursdays, and that's what Shaw's talking about here. I do videos on Thursdays where I drill down on different option components, when, where, and why I find those. And he wants me to clarify some exit strategies for that. I'll talk about that in a moment. If you guys want to learn more about those types of strategies, make sure you hit that subscribe button. There's a little bell right next to it that'll give you a notification. Anybody out there, because I will pop on late on the day, unannounced sometimes, to talk about trades that I find. So make sure you guys click on that little bell. And if you have a takeaway, make sure you feed those bots. Smash that like button. All right. 37,000. I don't think we're really going to see 30,000, but that 50 Fibonacci, that's usually a bit of an iffy support resistance level. We can see that peel through, especially with that point of control just slightly below that. So those are going to be your key support levels. It really needs to hold this 43,788, or, as they say, it will start hitting the fan. All right. But I'm expecting it to stay in the 40,000 handle at least here. All right. We got VIX moving a little higher, and that's really because the Dow is the driver to the downside today. We can see that this is the NASDAQ just slightly in negative territory. Folks, tech is going to survive a little bit stronger right now if we see a slowdown again, especially with these Delta variants and the cases spiking. We're seeing those levels start to move higher. Well, are we going to have another shutdown? That's still quite a possibility. That would lead the tech sector much higher. All right. Dow Jones Industrial Average. We talked about this 50-day simple moving average yesterday not being as much of a major support and resistance because, again, there's that point of control right below it. That's the magnet, is how I refer to it a lot of times because, like we said, you get used to those prices. The market wants to revisit those. So you can think about this as being that magnet sucking the market back down. So I would actually think that the Dow is going to maybe take a little pause here, possibly revisit 34,000. But for the most part, I think we're going to kind of hang out here for a moment and then start revisiting some moves to the upside here in the Dow. If I can, there we go. Are you going to let me use my marker? All right, E-mini S&Ps also making it look like we're finding a little bit of a bottom here. Yeah, we're not really quite to this Fibonacci or the 161 extension. I probably should throw up some new ones. I like the extensions on this though. So we're going to find some support there. And we've also got this trend channel. Keep your eye on it. Hits that trend channel. That's going to be looking like an opportunity for a bullish trade in SPY or SPY, SPX, depending on your portfolio value there. Here's what we're looking at today. Yes, it is a lot of memorial for September 11th. And a lot of that is weighing on the markets. Something I would have to say about the way that this market looks, we might get a little bit of a bounce here later on this afternoon, but keep in mind, it is still a rush to the Hampton. Yeah, we just had Labor Day. A lot of people kind of blew off some steam there, but it's still pretty much a summer market here. And I think that we're going to see a lot of people kind of hit the road early and get out of town. So I think we're going to see that similar situation later on this afternoon in New York. We're going to see some people flying out of town, and we're going to see volumes really precipitously drop off, folks. So that said, we could easily see this market slide a little bit more. It's going to all depend on really retail traders and how they're reacting. All right, a couple things that I was talking about here. Penn, you guys, I don't know if you guys follow Portnoy, but folks, Penn owns like 30% of Barstool Sports, and now he's coming up with a frozen pizza, and it's going to Walmart. So it's not just going to like small grocery stores, like it's going to the biggest grocer out there in Walmart. So I think it was September 28th or something. That's something to keep an eye on those sales, because that is going to directly impact Penn. Portnoy is a marketing genius. I'm still bullish on Penn. I think these all-time highs are definitely viable. He's just a marketing genius. And there was another one that I wanted to talk about, and I'm drawing a blank. Oh, XLU. That's where we're trying to get here, Shal. All right. XLU short straddle. So we're looking at this one. It is breaking down, but it's still within my limits here. I'm keeping my eye on this support level right here, Shal. So my thing for this trade was on an upside move. For me, my break even on this trade. Now, for you folks that don't know, I was talking about this straddle yesterday in the webinar and my rules in and around this. Now, I set this straddle up last week when we had some really high volatility. Volatility did come out the last few days, and we traded sideways here, as you can see. Volatility is creeping back up, but my out on this trade, if I had a lower risk tolerant appetite, I would probably get out if it breaks below this line right here. We're going to call it, let's just call it $68 would be my out. That line might be a little bit high for a good out there, but $68 for a low risk tolerant. I was talking about, for me, I am looking at my break even being down here around 67. We break below the 67, I'm going to pull the ripcord on this straddle to the downside. And if we really break above this 71.1, which is inside of my break even there on that trade, I'll be looking to get out. So settlement above that fib right there, which is the pre-pandemic high, or a break below this value area high here. I'll be keeping a real close eye on this market action around $68 though, for sure. Does that make sense? So on this straddle, I personally ended up doing, and it's actually working out a little bit better now that we pulled back to around 69. But I talked about doing this straddle on my webinar. So I had the example set up for the 70 strikes. And when the next day came in, we had sold off a little bit. So I ended up doing the 69 strike, and I think I did those for around $2.80. This is off the top of my head right now. I don't have my portfolio up on the side there. But example in the webinar was the 70 strike, around $2.70. I did the 69 strike. So now this pullback has actually helped me get back closer to my at the money strikes, which is that 69. So this is good for me. And I will be looking to get out at 50% of max profit. As a matter of fact, since I'm talking so much about it, let's just pull this trade back up. I'm going to have to find my platform somewhere. I have to have it buried. All right. So just so I make sure that I'm speaking correctly and I'm not shooting from the hip anymore, let's talk about this for real. All right. So I did this trade, and it was the day after the webinar. So that's why I did the 69 strike. And I did the October 69 calls. All right. So I'm selling the October 69 calls, and I'm selling the October 69 puts. All right. That's what's creating the straddle. All right. That's why we call it a straddle there. You're straddling the fence, if you will. That's the hand signal for straddle. These I got for about $1.51, and these were, I think, $1.20 or actually $1.29. So all in all, I did that trade for, what is that, 280, right? So what we do is we add 280 to the 69, and that puts my break even to the upside 71.80, right? And then to the downside, I subtract it here. So my break even to the downside is 66.20. So my break even to the downside, 66.20. So you can see that my break evens are very good strike location. How did I get that straight? How did I get that so it was so wide? Well, we talk about that in the video. It was because I got it when the strikes had the most volatility in there. And what we do with this type of strategy is look for that volatility to come out. Now, this strategy is up money right now. It's just not quite at 50% of my max profit like Shao was talking about. One of my guidelines for those videos, I talk about when you get in, how you get in, why you get in, and then ultimately when, where, and why we would want to get out. And I try to at least take into the concept that there, some of you folks have a lower risk tolerance than me. And on a swing trade, really, this would be a major support area that most people would be looking at. All right. I'm looking for it to get tested probably, or something like that. So if you have a lower risk tolerance, new to trading, especially with a high risk strategy like this, look for it to stay within those. If you have a higher risk tolerant appetite or whatever, look for those being the levels that you're going to be. Well, actually, this is going to be your level, and this is going to be your level to get out. Does that make sense for everybody? Appreciate that. All right. So if you guys have anything you've taken away from this, smash that like button so that bot runs out and finds somebody else to share this information with. Comment like Shao. I'll be happy to circle back around for you folks, especially if you were watching this live. I will try and check those comments. Maybe I'll cover the stock you want me to look at tomorrow. And subscribe. Don't forget about that bell over at the side, because that'll give you the notification. If I find something on later, or find a trade to put on later on this afternoon, I'll pop on here, because at this point, I'm really just not finding anything super fun to put on. So maybe you guys will spark my interest with a couple of ideas over there on the side. All right. All right. That's all I got for you folks. Thanks for joining, and have a great weekend. If you can't take that, take it easy.